We're on the sidelines of the Global Islamic Economy Summit in Dubai. I'm delighted to be joined by Dr. Adnan Chilwan, Group CEO of Dubai Islamic Bank. Many thanks for talking with Reuters. You've just announced the license to increase your stake in an Indonesian bank, Penin, to 40%. Is this the shape of things to come for your bank?
Well, the increase in Penin to 40% is a culmination of a strategy that we went to market with in early 2014. Indonesia is an important area for us. It's a part of our Far East Asia strategy. Increase in Penin to 40% is the maximum allowable limit that a foreign institution can hold in Indonesia. It clearly gives us what we call significant shareholder status. It allows us to control the bank, and it allows us to focus on an area which has far potential within the Islamic finance.
Of course, others are getting out of Indonesia, are getting out of Kenya, are getting out of India. Why are you going in when they get out? Do you see an opportunity that they don't?
Well, if you want to have something you haven't, you have to do something that you've not. Clearly, I think a lot of players focus on low-hanging fruits. For us, it's a medium to long-term game strategy. We feel that the potential in some of the countries like Indonesia, Kenya, or India is far outweighs the ability for some of them to just go and get easy wins. For us, particularly, and I think, Axel, the idea is very simple. In some of these countries, if you just sell lollipops, you'll become a billionaire. Right? So the sheer market dynamics and demographics in this country, particularly in Indonesia, allows us to make sure that we can set up shop and take it forward.
Where else can we see your bank going in the next 12 to 18 months?
I think we've made our ambitions very clear in terms of East Africa. What we want to do is, sitting in Dubai, we want to be the corridor that connects East Africa. Africa is a very important continent these days. We want to connect Africa and Far East Asia, sitting here in Dubai. So if you look at East Africa, Kenya is a fantastic starting point. And from Kenya, within East Africa, the belt of the East African belt has Kenya, Tanzania, Rwanda, Burundi, Indonesia, and let's not forget India.
Let me ask you, back on Indonesia very quickly, is the regulatory environment more favorable for Islamic banks there than it is here in Dubai, say?
Well, in Indonesia, there are Islamic banks that exist. But given the population of Indonesia and given the overbanked Indonesian banking market, Islamic banking or Islamic finance has only penetrated 5%. So yes, regulatory setup in Indonesia is still evolving. But players like us would ensure that it allows the regulator to work closely with Islamic financial institutions and try and take the industry forward.
Bigger picture, the oil price, the global slowdown, liftoff coming, great uncertainty in the US, of course. How is the environment for your bank and your peers right now?
Well, listen, oil is a much talked about topic, right? And the low oil prices and the volatility in oil prices is something that we've witnessed half a decade ago. So this is not new. Having said that, I think what one should also understand is the staying power of some of these OPEC countries. And staying power is important to gauge because that's the power that keeps you running in business. The prices of oil is a function of demand and supply is in the hand of some of these OPEC countries.
You're not worried?
No, we are not worried.
Okay. Let me ask you a final question. And I'm going to give you a little bit of a heads up because we're on a panel together in an hour or so. I want to look at the market in general for Islamic banks. And I wonder when you think this sector is going to become more than a new, exciting niche sector, when it's really going to break out into the mainstream, when you're really going to show the differences between Islamic banks and conventional banks?
I think in the past what we've been doing is we've tried to show differences between Islamic banks and conventional banks. I think that's where the script has gone wrong. In my opinion, I think if you want Islamic finance and Islamic economic sectors to boom, you've got to make sure that you are targeting all, and it's just not a niche. Today, the growing awareness in the market for Islamic finance is far more than what it was. Actually, let's not forget, this is a 40-year-old industry, right? So I think let's walk before we run. We are comparing ourselves with an industry which is 400 years old. So I think we need to slow down a little. The giant strides that the industry has made in the last 40 years is, I think, something that people should really acknowledge, appreciate. And
isn't it a little bit of an excuse, this was still a young industry? I mean, the Airbnbs and the Ubers are extremely young businesses and industries, and they've gone viral very, very quickly.
Well, it's not an excuse. It's just because that the script so far has been to focus on making sure people understand what Islamic banking is all about and comparing it with ethical banking. I think if you want to travel from Dubai to Heathrow, you're not going to go to the travel agent and ask for an airline which is safe.
Right.
That's within the DNA. You've got to make sure that Islamic finance complies with Islamic Sharia, but I think the proposition needs to be such that people understand that there is more to it than just Sharia compliance.
Adnan, thank you very much indeed for talking with us.
Pleasure.
Dr. Adnan Chilwan, plenty more interviews from GIES today here in Dubai. I'm Axel Threlfall, this is Reuters.